Hello, welcome back, guys. Finally, we're having a good day for Alibaba and the Chinese market, and overall, I should say, the US markets as well. They are up a lot today. If you take a look at our dashboard here, you will see that as I'm making this video, the Nasdaq is up 3.3%, the S&P 500 is up 2.6%, and the Dow almost 2% over here, 1.8. So let's go back to Alibaba because today it is up about 6%, as you'll see here, after it has been going down a lot in the past few days. Again, along with the rest of the market, so it's not a surprise that this has been going down as well. Now, currently sitting at 77, this is a stock that has obviously been destroyed through the past few years. If you take a look at the 3 years chart using our tool, you will kind of see that it has been in a downwards trajectory. And if you bought, during this downturn, there is basically I should say, no line in the sand for you. It's going down and down and down, and it's easy to think that this will keep going down. And it could. I mean, it could go down even more. It really depends on what's going to be happening with the markets. But the thing is, it's been down about 60% right now. And stocks that are down so much, they could rebound very, very quickly too. So you could very easily see a stock having like a 30% or a 40%, 50% gain in a period of like a week. And it has happened. And it has happened with Alibaba as well. So if you're thinking of just holding off and buy at a later point, it may work out, but it also may not work out. So you have to be careful about being too greedy, I should say. Now we will examine what is happening here. Again, it's sitting at 77, which I think it's an insanely low cost basis here for somebody that's entering the stock right now. I have bought with an average of about 94, and I'm actually very happy. I thought that I got a really, really good bargain. I still think so, despite the fact that the stock has been going down, because again, you cannot really know what the stock price is going to be doing in the upcoming weeks or days or months even. But you do know if you're buying it at a good price compared to what the company has been doing financially. And we have talked about the company quite a lot. Now, I'm going to be taking a little bit of a look at some interesting articles here. Like, for instance, this one, stock rebound could be fast and aggressive, what I told you earlier. And again, this has happened in the past. Last time Alibaba traded at similar levels in mid-March, the stock aggressively rebounded by nearly 70% in the blink of one trading week. And again, this happens a lot. And this is why it pays to be invested and stay invested in the markets. Because, the moment you sell a stock, maybe for a week or a month, it could actually go against you and the stock could gain a lot, or in some situations, if you are shorting, it could lose a lot. So, entering and exiting the markets, especially for a specific stock, could actually be, the lucky factor for you, but it could also be the unlucky factor for you. So it's generally speaking a little bit of a chance that you are taking by doing that. Now, the author here remains confident that the stock will trade once again at a fair valuation, which I see at $134 a share. I think it's even higher, frankly. But yeah, 144 makes a ton of sense for sure. And as you'll see, yeah, we are seeing that the thesis for this one is that we are having people that are getting more and more emotionally attached to the company, and that makes a ton of sense. I mean, again, if you have bought at any of these points here, you are effectively holding the bag for a while now. It's been like a 2-year period here, and so people are getting more emotionally invested here, and this means that the market is getting more and more fearful. The thing is, when this happens and when the rebound happens as well, you could have a very, very steep move to the upside. And I think it will eventually happen. Now, I don't know when, of course, but this is why I'm buying Alibaba. I have bought Alibaba and I'm holding it for the long run. Now, you will see here that the challenges are real. We do know about this one. There are lots of issues with current markets right now. Remember, China is basically locking down themselves. China is basically having some crackdowns in tech, although these seem to be dissipating right now. And the pandemic, they also have like these lockdowns which are nonsensical. Basically, the world has moved along from COVID, yet China is still locking down people. So this is really, really hurting their economy, as you can understand. And you will see here that since about 4 quarters, the economy in China has been pressured by a real estate crisis that has been referenced as China's Lehman moment. So, if they have a capitulation event like of this sort, you could still see their stocks and the stock market go down even lower, even though it's down like 20% already. Now, of course, there is also the recovery potential, and this could be a long-lasting one. I mean, the stock price, the stock market in China has been going down for a long time now, and when this happens, pretty much like clockwork, it comes back. And again, it may take a little bit more time. It may take like a year more. I think it will actually, frankly. But in the end, I truly believe that this is going to be reversed. And a lot of these companies that have been really suppressed right now, they have attractive valuations, as the article is talking about here. Really attractive valuations for a lot of these. Like, take a look at this one, like a 10 PE for that's the forward PE, pretty much. But yeah, the valuations of Alibaba are insane, and a lot of other Chinese companies. Tencent is one that I also like a lot as well here. Now, some positive things about Alibaba. What's going on with Alibaba shares? So today they are up 6%. So why? There are a couple of reasons here. They are trading about higher by 3 is the article when it was written, but right now they're actually up about 6% as we are midday. And what happened? Chinese President Xi Jinping, in his Sunday speech that laid out the Communist Party's agenda for the country over the next 5 years, has struck an optimistic note on technological development, stressing the needs to focus on winning battles and in important core technologies. So this is obviously super important here. Now, there is more. And there is more that is very interesting here. China to ease share buyback rules amid a sluggish market. And this is very important as well, because a lot of these companies, Chinese companies that have been having suppressed stock prices, they could be looking and they should be looking to be buying back shares. And we do know that Alibaba will be buying back shares. They have announced that already. And it makes a ton of sense with these valuations that they are currently having. They should be buying back their own stock. I mean, that's a prime opportunity here. And so what happened here? They plan to revise rules to make it easier for listed companies to buy back shares in a bid to bolster corporate value and protect investor interest over here, as the stock market has lost like 20% of their overall value. Now, you'll see that buybacks can be triggered when a company shares fall 25% within 20 consecutive trading days, according to draft rules soliciting public opinions. And that companies with a current trigger of a 30% decline. So it's a prime opportunity for buying, of course, buying back some shares here. A company will be allowed to implement share buyback 6 months after listing, according to the rules, compared with the 12 months that this is the current rule. So this is going to be a shortened time window where companies and senior executives are barred from buying shares over here. So yeah, the existing bar for share buybacks is relatively high, and the rule changes are designed to facilitate such behaviors. So they are making it easier, and this is great for people who want to capitalize on that and who will eventually capitalize on that. And people who are buying back these shares, they are looking at these current prices and they are definitely salivating. If you take a look at Alibaba, for instance, they're having a price to free cash flow of less than 10 over here, which is insane. Now, the price to earnings ratio is higher in the past few months just because they have had much less net income in the past few quarters. Is the reason. But practically speaking, this was a one-off event. This happened because of some investments that went wrong, and also because of the China lockdowns, and generally speaking, the weakening in Chinese economy for the past few quarters, which we don't really anticipate China to continue forever, of course, and also Alibaba to continue forever. This is sort of like a one-time thing. And this is why it's a great opportunity to be buying Alibaba right here. This is why I bought it myself. And if we take a look at our stock evaluation tool, you will see that I'm gonna do a little bit of an experiment here. I'm gonna go 0% in revenue growth for every of my projections here. So with all projections, I'm going 0%. So I'm claiming that Alibaba won't be growing at all. It will do actually 134 billion for the next 5 years and will not grow at all, like 0%. And you will see that the company has been growing at a much higher pace through the years. It's nowhere near that. Yet I'm going with these projections. Now, I'm going to be using a net income margin of what is relatively typical for the company. Again, this last year has been the odd one out. This is not normal for Alibaba, so I can't be using like 7%. It's not going to be happening for the upcoming years. So I'm going to go still a little bit lower, though, than what they typically do, like near 20%. So I'm going to go maybe 16, 17, and 18 over here, which is significantly less than what they usually do. And the free cash flow margins that they achieve are typically more than 100%. 13%. Still, I'm going to go 90, 100, and 110. And an annual return of 13% is a typical one that I'm aiming to achieve. And as you can understand, these are very, very, very conservative projections over here. Super conservative, frankly. No growth at all. Net income margins that are suppressed. Free cash flow margins that are relatively okay, average. And an annual return of 13%, which is the one that we typically want to be getting. But yeah, overall, these are very conservative. And when I hit calculate over here, what am I getting? We are still very, very comfortably in the green over here with a low of 96, even for these, again, valuations, which are extremely conservative, and a medium of 114, high of 133. With the current price at 77, which I think is a steal. And if we go with revenue growth that makes more sense, maybe 5, maybe 8, 7, and 10, what do we get then? Then we're getting a much higher valuations here with our high even at $200. And I think that this is much closer to what the company is actually worth. Maybe somewhere in between these two values, the medium and high. This one is definitely, I think, that the one that definitely strikes me as a very fair value here. But this one is also not far. So yeah, somewhere in between over here, I think is what Alibaba is actually currently worth for making like 13% in the next 5 years. So yeah, this is an absolute bargain over here, and I kind of wanted to make a video talk a little bit about it because we had some news and because we have a little bit of a positive thing going on today with the markets in China and overall the US markets as well, and European and everything. So thanks for watching. I hope you enjoyed. Leave a like and subscribe, and remember that you can gain access to our tool here, do whatever I did by becoming a Patreon. All the links in the description box below this video, and I'll see you in the next one. Bye bye for now.